Do you want to learn how to invest in real estate? Perfect. Today's video is all about 7 strategies you can use to become a profitable real estate investor. And the best part is, there's a strategy out there for everyone. So stay tuned. Hey guys, Andrew Ferguson here from The Economist. Today's video is all about 7 different strategies for real estate investing and hopefully figuring out which one is best for you. So before we get started, just a reminder that if you feel that this video is providing good, relevant information for you, smash that subscribe button and help spread the word and keep people informed about different ways to invest and to create wealth in their lives. Let's jump into it with strategy number 1, house hacking. This is probably the most basic strategy out there, and what it involves is you buying a property, living in that same property with a bunch of renters that will help pay down your mortgage for you and cover all your bills. So you're effectively living for free in the property, which is how the term house hacking came to be. You're basically hacking your way to a quicker financial future by having other people pay down your expenses for you, right? Everyone knows the biggest purchase in most people's lives is their house. So if you can find a way to take that expense away and make it zero and then get cash flow on top of that, you're just putting yourself so much further ahead than everyone else by doing that kind of thing, right? So house hacking is the first real estate investment strategy, and that can be a duplex, a triplex, it can be a student rental if you're just young and starting out. Basically anywhere where you can just rent one of the bedrooms. Let's say it's a 5-bedroom house. You take one of the bedrooms for yourself and you rent out the other 4 rooms on a per room basis, and those people's rent are covering your mortgage, your utilities, any insurance you have on the building, and property taxes, right? All those expenses are covered. And if it's done well and it's done right, you can actually have some cash left over at the end of the day that goes into your pocket that can be spent on savings, trips, groceries, whatever you want to spend it on, right? It's your cash flow. So that's the first strategy. It's for those who are just starting out and want to accelerate their growth. It's a great way to reduce your expenses, keep your expenses low, and build equity at the same time, okay? So it's probably best suited for investors, again, just starting out, just figuring out how it works, and they don't have a lot of capital, or they don't have a lot of options right now. I would definitely recommend checking out house hacking as a way to kickstart your real estate investing future. On to strategy number 2. Now this one is very, very simple. It's probably the most widely used strategy, that one that people understand the most, and its term is called buy and hold, which essentially means that you're buying a property, you're renting that property out, and you hold it for a long, long, long time. So you're getting really good returns on appreciation, because as we've seen historically, housing prices keep going up. You're getting mortgage pay down for your tenant who's paying down the mortgage for you every year. So as this appreciation goes one way and goes up, your mortgage that you have left to pay on the house keeps going down, and that spread between the two becomes the equity that's building up in your property over time. So the longer you keep that house and the longer you have tenants renting it and paying down your mortgage, the more equity you're building, and it's going to go up year by year by year. So again, the longer you hold, the more equity you have, and the more cash you'll actually have at the end of the deal. So maybe you use buy and hold as a retirement strategy. When you're 20, 25, you buy a property, you hold it for 25 years, and then when you go to retire at age 45 or 50, you got this great little asset sitting there that's totally paid off, and you have a huge pile of equity. Maybe it goes from 250K up to 450, and you have that sitting there waiting for you to use it as your retirement income. That's the benefit of the buy and hold. It's the most widely used strategy that I've seen, and it's the easiest one for people to get started in if they're doing this for the first time. Number 3, Airbnb. Yes, you've probably heard of it. It is becoming more and more popular in the high touristy areas, and that's because it is very, very lucrative, and it's a little bit different than the buy and hold strategy in that your tenants or your guests are coming in and going at a quicker rate. The bookings are very short, but you're getting paid a premium because you're doing more work in between those guests to get the units ready and keep things in a good state of repairs. The most profitable Airbnbs are in the highest tourist locations. They can charge more, they're closer to the attractions. If you want to get started with Airbnb, I'd recommend before buying your first property, just specifically for that, take a room in your house, list it on Airbnb, go through the process, work out the kinks that way, and see if you actually like the process. If you don't, maybe buy and hold's a better strategy for you. If you really like the process, you like the platform on Airbnb, go ahead and start researching areas that you want to invest in for your first Airbnb property. Make sure you find out local housing regulations, because some cities do not allow Airbnbs in their city limits. And if you buy a property specifically for that reason and it's not allowed, that's going to hurt the pocketbook long term. So that's Airbnb. It's a great quick strategy to get going. If you have a property that you can rent out to tourists, you can charge a higher premium. You can make more bang for your buck. Just a little bit more legwork, getting the property maintenance under contract, getting the property cleaned after guests. The turnover has to be planned a little bit more, but it's not a hard thing to do. And once you have it under your belt, practice on your own home first. You guys will be flying with it, and it'll be a great strategy for you. On to number 4. It's all about house flipping. Maybe you've heard this strategy before. It essentially involves someone buying a home, fixing it up, selling it for profit, moving on to the next one. So it's just a cycle rotation of capital. It works best for people who are good with their hands, who can do the repairs themselves, because it keeps their costs down. If you do have to hire a general contractor to do the work for you, it's going to eat into the profits. So if this is your first deal, do the work yourself. You'll figure out and learn a hell of a lot about how houses put together and what repairs really add value and maybe which ones don't. This one's big if you also have a network of contacts. If you do want to have someone manage the project for you or be the project manager yourself, you have to have a plumber, a handyman, electrician, a window company, a roof, gutter, all that stuff has to be contracted out piece by piece, or you find one company that does it all, but you still have to manage them. So it's very, very hands-on. But again, if you do it and you do it well, you can quickly build capital. And when you take the profit out of a flip, every time you sell a property that you flip, you take a little bit and put cash in your pocket, you take the rest of it and put it in the next deal. The only thing that I don't like about flipping is that it is very demanding and hands-on. If you want that passive kind of buy and hold strategy, this is not the strategy for you. If you want to get it, your hands dirty, get into it and do all the work yourself and go, this is a great strategy to get you started and to build that quick equity up. Strategy number 5, it's all about the BRRRR, baby. Buy, renovate, rent, refinance, repeat. It's that simple. This is how it works. You buy a property, just like a flip. You put your money into it and you fix it up, just like a flip. You then rent it out, like the buy and hold method, and then you go to the bank and say, hey, I bought this asset, I fixed it up, now it's worth this, there's people in there renting, what can I refinance it for? You get a new mortgage and you get some of that equity built up from your renovations, right? You take that in your pocket and you go buy another property, do the same thing. So it's really just a blend of the buy and hold strategy and the flipping strategy, and just put together. All the best things are amplified, and you get to build up equity in the property. You get cash flow, you get to hold the property instead of selling it. So you can hold it long term, and you get to take your money back out, just like a flip, and put it in the next one. So that's why it's probably the best strategy that I've seen for getting further ahead quickly. It is a little bit more advanced in terms that if it's your first property, it's going to be tough to do without a mentor or someone guiding you through. Maybe start with a flip, maybe start with a buy and hold first, and then on property number 2, get into a actual BRRRR. If you do have a good mentor though, it can be done. It's just something that takes a little bit more education and a little bit more planning before you go ahead and do that, in terms of selecting the right property, finding the right contractor to do the work, and all that stuff. If you don't do it right, really impacts your bottom line. So you want to be able to maximize your return, make sure you have cash flow after the deal, and get that equity out as quick as possible. So I would advise that this is a more intermediate level strategy, unless you have a good mentor and a good team in place guiding you through the process. But again, very lucrative, quick way to get through a property. You can probably fix one up in about 6 months and increase your rents, plus get the refinance money back and go on to the next one. So you can do 2 deals a year if you're by yourself. You can do more with a team, obviously, but it's great to get you going if you have 1 or 2 deals under your belt, and it's a quick way to accelerate and grow your portfolio on real estate. So strategy number 6, it's called real estate wholesaling. And this one's a little unconventional and probably not one you guys have heard of before, unless you're doing your homework and you really know what's going on in the world of real estate investing. So wholesaling, basically what happens is there's a buyer, a seller, and a wholesaler in between that brokers the deal to get things done. The seller wants to get rid of their property. The buyer wants to buy a property at a good price. The wholesaler actually finds the deals and puts everything together. Let's say there's a seller who wants to sell their property for $90K. The wholesaler says, okay, I'll buy it for $90K. Before that actually happens, he's gonna flip that deal to somebody else, but raise the price by $10,000 for actually putting the whole deal together and finding the property and making that connection. Then he's gonna say to this guy who's the buyer, okay, I have this great deal, do you want it for $100K? They're gonna say yes, perfect. So the wholesaler makes $10,000 in this transaction, the seller sells for $90, the buyer buys for $100K, and the $10,000 again comes to the wholesaler. And why this works is because the buyer and the seller may not necessarily have time to come together to make the deal happen, which is the work that the wholesaler does to actually put things together and piece all the parts of the deal into one. That's what the wholesaler gets paid for. And the wholesaler never actually owns any property. They're just brokering all these deals and working their contact list to make a greater return. So that's wholesaling in a nutshell. Again, a little bit more of an advanced strategy. I'd recommend getting a property or two under your belt or working with a mentor on this if you wanted to get into wholesaling real estate as an investment tool. Now, our last strategy of the day, real estate investment trusts, or REITs. So R-E-I-T. What these are is basically a pool of investors' money that's pooled together and invested by a company into different assets of real estate. It could be condos, could be apartments, could be single-family homes, could be mini malls. And the nice thing about these investments is that they're not central in one city and they're not central to one type of asset class. It's all real estate, but again, different types of real estate. So you as the investor are basically buying a real estate stock, and the advantages to you as the investor are this. You don't have to be a landlord. You don't have to be hands-on. It's very, very passive. It's just like owning a stock. You can sell and buy, so it's very liquid. If you want to sell a house, it's going to take maybe 2-3 months if you want to do it aggressively. If you want to sell a stock, you can do it instantaneously by placing a trade online on the computer or from your phone. So it's very liquid, which is great if you want to move your money around to different things. You're also very diversified in your investment, as we said. There's lots of different types of real estate that the actual money is invested in, and it's spread out among these things so that you're not putting all your eggs in one basket, which we know can bite you in the ass if one part of the stock market or the real estate market decides to crash. So if you haven't heard about it before, check out an REIT, a REIT, a real estate investment trust. It's a hands-off, super passive way to own real estate without actually physically owning homes. And it's great for those who want to have a passive investment portfolio but still benefit from the appreciation that real estate sees over time. I really hope you guys found value in this video today. Got a little bit more education out there for you. If you did, do me a huge favor, smash that subscribe button below, all right, and answer this question. It is the question of the day. And it is, what strategy are you going to use to make money in real estate? Which one do you think is going to be best for you? Leave a comment below. Let me know. Would love to hear from you. And you can check me out on social media. You can check out the blog at www.theeconomist.com. I will also put a link to that in the description below. Stay tuned for more content from The Economist. And until next time, keep investing in yourself.